Hey guys, welcome back to Sky Talks Trading. My name is Sky and I am on a quest to invest, and today I want to talk about SoFi Stock, some news, some updates, some price predictions. First off, Galileo Financial Technologies, which as you probably know by now is a subsidiary of SoFi Technologies, today announced its recent expansion into Colombia. Galileo is currently providing services in Colombia where it can partner with issuers, banks, e-commerce, and fintechs to enable their digital financial services offerings. Since Galileo's arrival in Mexico back in 2020, it has established itself very nicely as a leading financial technology company in Latin America, having onboarded more than 1 million end user accounts in the region. Together with Technicis, which SoFi recently acquired, which is a leading cloud-native digital multi-product core banking platform, Galileo provides Latin American companies with the only end-to-end vertically integrated banking technology stack, from user interface development capabilities to a customizable multi-product banking core and ledger with fully integrated processing and card issuing available. So this combination of Technicis' platform with Galileo will uniquely support multiple products, including checking, savings, deposits, lending, and credit cards, as well as future products. You know, I heard Mike Mayo of Wells Fargo, he stated on CNBC that, and I quote, "It's a great time to own banks." And Wall Street Journal reported that sci-fi movies are making a comeback. No, they reported that SoFi would be double by the end of the year and $20 after next earnings. You know, so amazing potential for growth. Shorts are getting a little bit nervous, I think. You know, they're kind of nervous people anyway, though. Though we must always look at the maybe not so good, some maybe let's say bad things, could be bad, and that is the student loan moratorium could get extended yet again. And yeah, that would be bad for SoFi in 2022 because student lending is a huge part of SoFi's business. Recently, Morgan Stanley analysts Betsy Krazek and Jeffrey Adelson downgraded SoFi from an overweight to an equal weight rating. They trimmed their price target from $18 to $10, which is a pretty big cut. And the main reason for the downgrade is that the two expect the federal student loan moratorium, which has already been extended twice and is supposed to expire on May 1st, to be extended yet again. And they said in their report that the moratorium could now extend all the way until 2023. And if that is the case, that would be quite bad for SoFi's outlook in 2022 because, you know, student lending does make up a decent part of the business. SoFi offers many products, you know, including cash management accounts, online investing, and various lending products, including credit cards, personal loans, mortgages, and student loans. The lending business is easily the greatest contribution to revenue and profit at the company. In 2021, the lending division generated nearly $12.7 billion of originations, contributing nearly $764 million of its more than $1 billion of total adjusted revenue. It also added almost $400 million in profit, again, far surpassing SoFi's other two divisions. So, you know, the numbers rarely lie. So it is, you know, you can see that it is a very big part of their business. And before the pandemic, student lending was easily SoFi's largest loan product. Of its $11.2 billion of total originations in 2019, close to $6.7 billion were student loan originations. The bulk of these student loans come from refinancing existing loans. But as these two analysts, Kresik and Adelson, note in their report, borrowers don't need to refinance as much with the current pause on federal student loan payments. But there is still some uncertainty. It's not for absolute sure. It's not, you know, set in stone that it will be extended. but more and more analysts and experts talking about it as a possibility will obviously have a knock-on effect. But still, SoFi stock is still looking attractive, despite, it has been punished with the benchmark index sell-off. The company will still benefit from the projected 7 interest rate hikes in 2022 to combat raging inflation. Further tailwinds from its bank charter should materialize for its top and bottom lines. As well, they are acquiring the cloud core banking platform to help vertically integrate its business segments and accelerate growth opportunities. For any prudent investors out there that are seeking a very nice discounted bargain entry into a rising fintech player, can definitely see this pullback as an opportunistic pullback. If we look at some of the takeaways from the conference call, Noto, the CEO, continued to hammer in the point of SoFi hitting new highs across key financial metrics, including 54% year-over-year top-line growth. Growth continued in all 3 of its business segments, generating over $1 billion in total annual sales for 2021, and 6th consecutive quarter of adjusted EBITDA. SoFi ended 2021 with 3.5 million total members, and that is up 87% year over year. Its Galileo subsidiary grew account by 67% to 100 million. And back to the loan thing, personal loan originations grew 168% year over year in Q4 2021. I think it's safe to say that SoFi stock still remains, maybe a high risk, very high reward venture. Insiders are buying. They had a very good day last week on Friday, March 18th. Shares closed up nearly 11% higher from the prior session's close, which is a staggering improvement that gave a lot of SoFi holders much needed hope. Over the trailing week, SoFi is up 17%, suggesting that, anyone who's taking bearish bets on SoFi, they might want to rethink that. And like I say, insiders are buying SoFi stock, and this is a good sign because, insiders may sell stocks for a variety of reasons, whether it be for personal expenses, tax expenses, or a loss of faith in the company. However, there is only one reason why insiders buy stock in their company, and that is that they believe it will go up. So I just want to talk about some Tesla news. Tesla's new German Gigafactory is its biggest strategic endeavor in a decade. So the Berlin Gigafactory is now live, and it'll definitely be very important to Tesla's giant future. On Tuesday, the factory received CEO Elon Musk. He was there, and he presented customers with the first Model Ys made at the facility. Tesla's new factory is 20 or so miles southeast of the German capital and houses nearly, roughly 10,000 employees. But Wall Street analysts are saying that, this shiny new factory is not the only trick up their sleeves at the moment. They're speculating that the company has other bold moves to come. In their view, the chance that Tesla does not ultimately offer products and services to the eVTOL, that's electric vertical takeoff and landing aircraft market, is remote. So basically, Tesla are going to be a big part of the electrical vertical takeoff and landing aircraft market. The potential skills transferability and network adjacencies are just too strong to ignore. And they believe the segment would be called Tesla Aviation. By 2030, Morgan Stanley estimates the total addressable market for the eVTOL industry in the US could reach $12 billion, powered by interest in non-fuel powered short-haul aircraft. And so, Elon Musk has also been talking about his master plan part 3. That's getting people very excited. So guys, that is it for today. Don't forget to check out my last video where I talked about 4 stocks to buy now. There's some nice gems in there. And I hope you guys have a great day, and I'll talk to you guys soon.